Hey everyone, what's going on? Hope you guys are all having a fantastic day. Welcome back to another Bullish Bears video. In today's video, I'm going to be breaking down Tesla. So let's get into it. We're going to be going over the type of trend Tesla's in. Tesla is a very highly traded and highly anticipated stock, and it has been performing pretty poorly to say the least. It's probably one of the weakest performing stocks in the S&P 500 year to date. Same with the Nasdaq, it is one of the worst performing stocks. Meanwhile, we are in one of the strongest rallies we've seen in a long time. So let's go over Tesla. The first thing we're going to do is we're going to look at the weekly time frame to get a bit of a feel on the larger picture. So the first thing I noticed is we're making all of these lower highs. We have lower high, lower high, lower high. So on the weekly, we've just been creating this strong downtrend, right? We've been making all these lower highs. We have this trend line liquidity working as a resistance, and we've just been pushing lower, and we've sort of been squeezing the past few weeks. We have been in a range. So something else I notice is on the weekly, we have a demand zone down at the 118 level. So 118 is going to be bit of a swing trade if Tesla decides to keep pushing lower. So if we see Tesla below 152, I'd give it below 150 to be a key psychological level and hold. I would look for a swing trade to target the 118, 120 level, because remember, 120 is a key psychological level. A lot of people are going to be buying at these types of levels. So let's zoom in. We're looking at the weekly. Let's go look at the daily now. Now, what I see on the daily is I see we are in this range, and if we look to the left, we were in this range a few times. So the market has been in the past and definitely has been recently respecting this 160 to 177 range. So we would sort of be looking to trade the range at this point. We would look to go long near the 160 to 165, and we'd look to sell or go short around the 170, 175 area. As you see, we did spike through a couple of times around the 180, 183 area, but we ended up pushing back lower. Again, Tesla has been in a very strong downward trend, and just recently we are hitting some liquidity to the downside. So I'm really going to be looking to see if buyers can step in. I do want to see if we can also sweep the sell side liquidity around that 152.51 area. So that's at the bottom of that demand zone I was mentioning, but that's also an area where there are going to be a lot of people who bought Tesla in the past. Say they bought it last May, they bought it in June, they bought it any time from here to here, and they put their stops at a recent swing or a recent pivot. You know, they are going to be looking for, this is April to August, they're going to have their stops at this 150 area, and it's going to be a lot of liquidity that fills. So I might look for a reversal play once we break below the sell side liquidity, thinking that a lot of people are going to be shorting once we break that zone. If I was looking to trade, again, if I'm looking to trade Tesla during the day or to day trade, I would really only be trading the range. Let's break it down to a smaller time frame now. Now we could really get more of a cleaner picture on it. So we're looking at the hourly right now, and we see how we consolidate once we get to this level, we consolidate once we're down at this level, but we do have our buyers down here. So now that we have our range, we have where our buyers are, we have where our sellers are, we could try to find some supply and demand, find some key points, some key areas to enter. So the first thing I notice is we have a bit of a 30-minute supply zone that caused a gap, and we did try to fill that gap when the market opened on Friday. This is April 5th. So because we did fill that gap and hit that supply zone, it is still valid. We did not break it. So something I might be looking for on Monday is a push into this 170 to 172 supply zone and a push back lower. This would be the push that I would need to have us break the market. If not, there's a good chance that we might continue to consolidate in this previous range that we were in before. Now, if we don't get this rejection and we break right through the supply zone, no problem, and the market seems strong, I might look to reverse this trade. I might look to, instead of going short in supply, I'll see how we react, push higher, and see if we can get a retest and go long at that point, keeping our stops below the supply zone, and we're flipping the supply into demand. Another thing I did want to point out is now we do have another supply zone. This is on the hourly chart right here as well. So now that we have all of the supply zones sort of stacking up, it's really making me hesitate on if I want to go long against this bearish trend. So we have S1H, that is our 1 hour supply. So now I'm sort of second guessing if I want to go long off of this. I'd much rather be patient and try to short the top of the range with this supply zone. Now we have the top of the range and the supply zone as extra confirmation. So now instead of looking for the 30-minute play, I'm going to be seeing how we react at this hourly candle, but I'm going to acknowledge this 30-minute supply too, because if we don't come back to the 1 hour, this 30-minute might be the place to enter. Alright guys, I hope this analysis helped you guys. I hope you guys can take some great trades. Remember, this is not financial advice. Take trades at your own behalf. Make sure you guys have a good risk management on the trades. I do not want you guys full porting anything. Good risk management, consistency, and showing up is what makes great traders great. Alright, take care everyone and happy trading.